No, I don't think this will derail the trade negotiations. It's just one of the factors which will be on the table in terms of the discussions. And there may be a little bit of leakage, which some of the oil which continues to leak from Iran, but nothing significant. And I'm sure that in a sense, Trump will have his cake and eat it. He'll be able to contain the oil coming out of Iran, but at the same time maintain the supply through agreements with his allies in the Middle East.
What if price goes up? Let's look at this in pure basics now. We have extraordinarily high Brent prices. We've got WTI at its highest level, had its best day since February and at its highest level since last October. If oil continues to go up, India, their budget is under huge constraint. China, they will have problems, and so will the US as well. We can't have higher oil prices, can we?
More important than India and China, as you mentioned just earlier, is the electioneering of Trump. And it is core, especially as we're heading into the driving season during the summer. It is very important for the average American, the price of oil, and heading into 2020, Trump will make sure that that price of oil is contained. So I do not believe that we're going to see an escalating price of oil.
I would probably, from what Dan was saying earlier, about the more control which is being asserted by OPEC Plus and by Mr. Trump on the back of this as well, because what it does is, and all oil watchers know this, it takes away global spare capacity. If the Russians and the Saudi and the EIA data which is coming out for the US as well says that there's less spare capacity out there. That means we are more at the whim of the vagaries of demand changes, let alone the supply changes, which says to me we could have a much more volatile market, which is very bad for investment and very bad for everyone.
Yes, the volatility will arise, and we also saw significantly the movement up from the low 50s up to high 70s and all the way back down to sub 50 earlier on this year. So volatility is here to stay, but at the same time I wouldn't expect that level of price to head back towards the sort of 80s, 90s and 100s.
A different message jumped out to me, and I wondered whether there was some politics in the background. I mean, the Saudis are allies of the Americans, and we know that there's been a lot of water on the bridge in the last 12 months. I wonder whether this was a helping hand, effectively writing the Saudis a check. I mean, they've been taking the hit in terms of removing the oil from the market, trying to rebalance the supply side. Now, if you've taken out Iran's contribution to the supply, doesn't it help the Saudis? Doesn't it lessen the hit that the Saudis have to take at this point? I
think the Saudis want stability. And one thing I know from the years when I've kind of been looking at this and looking at what Mr. Al-Naimi's done and then the current Mr. Al-Fali as well, is they want stability. And they don't want great oscillation. They don't want regional disputes. As much as they have problems with Iran, when they get around the table within OPEC, I was always told they leave politics at the door. Whether they're still doing that remains to be seen or not. And looking at allegiances outside of OPEC, i.e. with Russia and potentially with the United States, is that more important to the Saudis now than the old OPEC links and that? And I think that's a big question. But I think one thing I do know is the Saudis want smooth price. They do not want oscillation.
And also they want to diversify their economy. They've been shifting away from oil into the renewables, into the Vision 2030. They're opening up both the stock markets and the bond market. So
and has that been successful to date? I mean, is projects such as NEOM and 2030, is it stuttering a little bit?
It is stuttering a little bit, but there are clear signs of movement. And with the equity market being part of the FTSE and MSCI, it's also going to provide some liquidity.
Can I just round out the conversation on the risk-on sentiment then as we start the week? Because to me, this is quite a different picture, where last week before the Easter long weekend, we closed out the week with decent data coming out of China, relieving some of those hopes that the first quarter was fairly downbeat and now we're going to be able to avoid a recession. But now as we start out the week, we've got concerns about China moving towards structural reforms, not just the stimulus as we close out the week. And we've also got the pressure now around that US-China relationship as we seek a resolution. So is it going to be slightly more risk-off this week?
Generally, I think risk-on has been too risk-on. I'm sort of more concerned about levels of volatility, excessively low levels of volatility, below those we had last summer. I think there has been some complacency on that. So I am worried about markets in general. I'm not specifically worried about Chinese economy. I think that the levels of growth will be lower than what they had been, but the pie generally is so much bigger that the contribution to growth, both regionally and globally, is going to be significant. But I'm with you in terms of my concerns broadly about the markets.